Hello, ladies and gentlemen. Welcome back. This is Christopher Aaron. It is August 12th, 2020. First of all, off the bat, if I sound a little different, it is because I am traveling on the west coast of the United States and my professional microphone broke in my luggage. If they could start making these microphones a bit more sturdy, I would really appreciate it. No worries, we have a new microphone on the way, so things will get back to normal soon. But this is a very important video, because I'm going to share with you some analysis that went out to our premium subscribers just 3 days ago on our gold price forecast coming up for the second half now of 2020. This has been a very volatile week that we've seen in precious metals. Gold getting up above 2,000 and now falling back below it. Silver advancing almost to 30 and then falling back to $23 yesterday. So it's really important that we have a look at what is actually going to be happening here in the metals. And I want to share with you a snippet of our premium analysis so that you can get the benefit of that. Very quickly, make sure to hit the subscribe button, that red button, so that you will stay notified when these free videos come out, and hit the little bell icon, which will send you the alert when the videos are posted. We do a couple videos per month here, and I want you to get them. So let us look at gold for the last 3 days. What a period of time, right? Spiking up above $2,050 just 2 days ago, and then what looked like a mini collapse here. We had almost a $200 decline from the recent peak, which was up at $2,074 from late last week. And when you measure to this low that was hit here just this morning, this was over a $200 drop in just 4 trading days. Can you believe how violent this market is getting? I mean, sometimes you just need to think about it. If gold were to continue falling $200, gold every 4 trading days, gold would be free in 40 days. So we know that this kind of drop cannot sustain itself. That said, what we want to try to do here is look at how far this decline could go and what we should expect from gold coming up over the weeks and months ahead. So we're going to switch to the long-term perspective. Let's review this very briefly, and then we will switch over to the premium subscriber video where you're going to see our takeaway on what should be happening to gold for the rest of this year. Here is gold from 2001 through the present. I'm going to bring up the key. If this form of analysis is new to you, make sure to hit the pause button and look at what all of these lines mean. Look at how we're talking about the long-term rising trend here that formed out of 2001, represented by the magenta color here. Look at how we were talking about significant support, which was former resistance at the 1,000 level going back to 2008. So everything here has a meaning. And what we want to do is zoom in on this period of time just over the last few weeks. What we're talking about is the period since gold broke above 1,800, spiked to above 2,000, and as we're speaking, it has come back to 1,915. So let's zoom in to this. Now, the video that you are about to see, the premium subscriber video, was recorded right here on Sunday night, Monday morning into Asia. So it was recorded when gold was trading just above $2,030. And I want you to watch this video, watch the takeaway for what we should expect for gold over the next 4 to 5 months through the rest of this year. And then we will come back to this chart and we will look at it. Keep in mind, since this video has been recorded, gold fell almost $150 and has since recovered a little bit. But let's look at what we should be expecting for gold throughout the rest of this year. And then I will see you back here on the other side of this premium video that you are now going to watch. And we just saw this pattern. Remember this, going back just 1 week ago. This was the member update talking about gold. And we were talking about an ascending triangle. You can see it here shaded in blue with flat resistance and rising support. $74 amplitude this time added on to the breakout point. Let's fast forward it one more week. Boom, there was the ascending triangle. Boom, there was the target. Target has been achieved, and we had a slight overshoot to 2077 in the overnight spot market hours just a couple of days ago. So you can see how these targets work here. They're calculations based on observable patterns in the market. Of course, the patterns representing fundamental developments, but the sum of the fundamental developments, not any single one. So what do we expect for gold here? It looks like a short-term top has formed here for gold at 2077. We are back down to 2031 as this is being published. And let's look at these projections now for gold based on all-time high breakouts, which is what we have just seen. We are going to look at the only three examples from history in which a market has broken all-time highs, in which a gold market has broken all-time highs. The first example is going to be the 1970s bull market here. We're going to zoom in on the period from 74 to 78. You can see the net sum. Gold moved from $35 an ounce up to $870 an ounce. But let's zoom in here on this period where gold actually broke above the previous all-time high from 74 to 75. Let's zoom this in. And what you can see here is on this breakout above that 74 peak, which was just below the $200 level. Let's call it 197. You can see gold then took 2 years to decline, 2 years to regain those declines. And notice what happened when it finally broke the former all-time high. We had an initial surge, a 9.4% decline back down to 197. In sum, a 25% surge up to $243 per ounce, followed by what? A 20% correction back down to 193. So remember the percentages. It's the percentages that are really important here when we're learning from these examples in history. It's the percentages that are important, not the dollar amount, which seems insignificant. A 25% initial surge followed by a 20% correction. And of course, we said this accelerated. This accelerated up to $870 over the next year. But we're focusing in on this breakout period, which is what we are in right now in the gold market, to try to learn some lessons. Let's look at one other example, actually two other examples. We'll look at the 1980, from that 1980 peak through 2007, early 2008, when gold broke out again. And so let's zoom out here on the breakout above the 1980 former all-time high and look at it. There was the breakout. There was the former 1980 all-time high, as I said, just above $870 this time was that peak going back to 1980. And so there we had the breakout, right at the end of 2007, first couple days of 2008. The initial breakout, a 7.3% correction back down to this 845 level. The entire breakout was a 15.5% surge up to $1,033 here, lasting a bit over 3 months, followed by what? A full retracement, a full correction back down to below the breakout point, actually. Slightly below the breakout point here for a couple days more there in May, 1 or 2 more days there in June. Just keep this in mind. 15.5% breakout here above the former all-time high, followed by what? A full retracement. Full retracement. Let's look at the final example. Gold 2008 is what we were just looking at, the breakout here in 2008. Let's look at the next breakout to an all-time high, which happened in 2009. The initial breakout here, a little 4.1% correction. I believe we are in this first little correction right now. Overall, a 19% surge from the all-time high up to $1,227 per ounce here in November 2009, followed by what? A almost full retracement, 15% back, right to just above the breakout point, which was $1,033. So there's a very clear pattern here that gold tends to repeat when it breaks to a new all-time high. And that is going to play out as follows. Based on these previous examples of how gold tends to behave, we can make these projections. From the recent peak of $2,077, we are in the first little initial correction. The least that we would expect gold to correct right now is 4%, which would take it from 2,077 back to 1,990 per ounce. Let's call it maybe an even 2,000, in that range of 2,000. This would be the least that we would expect gold to correct. The most would be that 9% correction, as we saw in the 1978 example, which would take gold right back to 1890 immediately. So from this correction, which is now happening, we should then see, after that retest happens, we should see a surge lasting into the later part of this year. And I'm talking this will be happening soon. This correction here should just be about a 1 or a 2 week correction. We're already 3 days into it. So this correction could end as soon as this week or perhaps early next week. Then we get the real breakout surge, which should take us to a minimum of 15% above the previous all-time high, which was 1,920 in the spot market. That would bring us to 2,280. This would be the minimum that we've ever seen a breakout happen in the gold market above an all-time high. And the max, as we saw in 1978, would be a 25% surge, which would take us to $2,400. So basically what we're talking about here is a little correction right now, followed by a surge to a range of 2,280 to 2,400. And this should be happening over the next 1 to 3 months. These figures here that we're talking about are not 2021 figures. These are late 2020 projections. From this range, we should see a very scary second 15 to 20% correction back down to basically the same range and perhaps even further as the correction that we are within right now. And so when we start getting into some of these targets here, this is going to be the point that we are taking some, I'll emphasize the word some, profits off the table in some of our mining holdings. And if we initiate another options trade, which I suspect we will here into the low of this correction, into this peak is when we will be taking some of those profits off the table, because gold should then correct 15 to 20% in late 2020 into early 2021, back down to a range. So can we imagine this? If gold hits 2,400 and then corrects to all the way back below 2,000. Basically, everyone who's buying at 22 or 23 or 2,400 is going to be underwater. They're going to be panicking. The miners will have fallen 30 or 40% in this amount of time. People will write the entire sector off. And then we get the advance to the outstanding target. So that was a portion of the last premium subscriber video that went out just 3 days ago. And look at what has happened since. So first of all, with these short-term corrections, even if you are a physical buyer and you're saying, I'm not looking to trade this market frequently, even if you are a physical precious metals investor only, I believe the evidence is there that this form of analysis is valuable. Because if you just bought, let's say you were just buying 5 or 10 ounces of gold, up here, or even just 1 ounce for above $2,000, if you could have saved yourself over $100 on that purchase just by waiting 3 days, wouldn't that have been good to do? So that is what we attempt to do here on this channel, is to identify high probability turning points such as what we have just seen. Now, you've seen what the forecast is for the rest of this year, and I held back the forecast beyond this year. That is still going to be reserved for our premium subscribers. But the rest of this year, it looks like there is a strong rally that should be developing out of this low. So this is going to be an opportunity to take advantage of here. We have higher targets coming for later this year, followed by what? Followed by another significant pullback, which should be very scary, not for you guys, but for the people that only approach this, let's imagine like 3 months from now when gold is at 23 or 2400. Imagine the people that are new to the market at that point. They buy all their gold, boom, and then gold drops $300 or $400 on them again. It's going to be very scary for them again. So get prepared, and there are ways to mitigate this kind of volatility. You can lighten some of your profits. You can buy put options. You can buy inverse ETFs. There are ways to profit or protect yourself when things move down, as they will. If you would like to work with me one-on-one, again, my name is Christopher Aaron, and I do consultations with individuals covering all aspects of the precious metals market. The only problem is right now we are on wait list only. We are fully booked for premium consultation clients for the time being. So if you would like to email the support team, we can put you on the wait list and let you know when our next available consultation is going to be. The other option for you to receive these types of updates, if you would like to have all the premium member updates such as you've just seen, not just 10-minute videos, but we do videos such as this that are usually 30 to 60 minutes every single week. We cover not only gold, but silver, what is happening with the US dollar, what is happening with the US stock market, because everything is related. Not only that, we cover the exact gold miners that we are buying and selling. We have had one gold miner rise 500% in the last 6 weeks alone. So think about that. Think about how much you might be investing into this sector, and then think about whether or not it might be worth considering this research service. I believe, and our existing subscribers believe, that it is highly worth your time to be considering this. Either way you go, I want to wish you the best over this time. The thing that I want to emphasize, if you're completely new to this sector, is that things are going to be getting more volatile than they already have been. These kinds of $100 a day are going to moves in the price of gold are going to get more common as we go forward. And so it's going to be very difficult, I believe, from a psychological standpoint, to invest all at one time or to not have a plan. I think having a plan for how you are investing is the most important thing. And it's important to incorporate this volatility into your plan. If you expect this ahead of time, then when it's happening, it's not so jarring. Okay, so we can see what's happening with gold. Silver is a whole nother discussion. It's going to be even more volatile than gold is, but there is a way to manage this. But just keep in mind, the powers that be and those who don't want to see gold rise too far too quickly, they're going to do everything that they can to try to keep the price of gold down. But we can see that the actual market for gold is more strong than any attempt to suppress it, which is why gold is now clawing its way toward all-time highs. So once again, make sure to hit the big red subscribe button to be notified when these videos come out. Thank you to those people who are supporting this channel on Patreon. Get ready for this volatility. Get ready for a nice move coming up ahead over the next 3 months, followed by what? A major correction, another major correction right toward the end of this year. Get ready for it. Build it into your plan.